Hey, welcome back to the Precision Data Analytics channel this evening. Today we're going to be trying to something a little more interesting. We've done some forecasting in the past, but now we're going to use the forecast sheets again to forecast the high, the low, and the close. Okay, for Johnson and Johnson. Okay, we start out, of course, as always, with, of course, before we get started, a quick disclaimer. This Excel tutorial video is for educational purposes only. It is not for financial investment or trading advice, okay? So anyway, over here we start out with your basic stock history function, right? So we're going back to 2024 to today. What's this? This is headers, daily, date, close, open, high, low, and volume, okay? So the first thing we want to do is we want to create a weekly function, a weekly table, and that table is going to contain the averages for the close, the high, and the low. Okay, so let's come over here, jump right into a little bit of Power BI or Power Query, right? Because through experience, as you realize, what our experience has taught us is stock prices work pretty well when you look at them by the when you look at them on a weekly basis. Okay, I will point out also that the actual weekly function option in stock history apparently, for instance, only take the last trading day of the week rather than say the first trading day of the week, supposedly. Okay, so anyway, transform. Let's go over here. Date. Let's make sure we're sorted. Okay. Let's come over to date again. Week start a week. All right. Let's sort again. So now we got 1, 2, 3, 4 rows with the same week start date and so forth. Okay. So let me come over here now. You do a group by date, column name. Let's see. Average close. No, let's make this average. Yeah, we can do this. This is fine. Let's see. Average high, sum, average high. And there's our 3 figures. Home. Okay. So now we got our averages. So let's just do a quick plot. See what we got here. So you see, interesting. Okay, well, I'm not quite sure how well this is going to work out, but let's just jump right in. Okay, you see there's not a lot of difference here, all right? Let's get rid of this. Let's begin our first forecast. First of all, let's forecast data. We want to forecast for January, right? Okay. Forecast start. Oh, I don't know. So there's one forecast. There's a forecast of the average low. The question is, can we in fact forecast all three at the same time? Let's see something here. No. Interesting. Okay. So this was what again? This was low. Now let's forecast high. Okay, and one more. So we got okay. Now we come back and we do one more. What's that we do? That's right, we do the close now, right? So here's our forecast then. Alright. I'll tell you what we're going to do. We're going to reforecast the high and the low. Okay? Very nice. One more. Now it's worth noting that what both LibreOffice Calc and Excel, first it uses ETS, second it uses what's called predictive interval, which basically gives us some idea of the chances that the actual price is going to fall within a given range. But we're not actually using confidence bands. Instead of confidence bands, we're using the high forecast of the high and the low. So now we got close forecast, high forecast, low forecast. Let's do this. So here's the low forecast. But let's do something a little funky now. Let's come over here and let's use the take function, alright, to only pull out the last 30 days worth of data, alright. Remember that this is a weekly forecast and the price is averaged. Okay, now we're going to take over to here. Alright. So now let's come over here. And see what happens. Okay, so the trouble is you got those things right there. I don't think you're right. Okay. Well, first of all, maybe we just need to format some here. It doesn't like those numbers, does it? Yeah. What we're going to do instead is this. We'll come down here. And we can just come over to here someplace. Okay, good. Let's take a look at our forecast then. Interesting. Well, this wasn't quite as exciting as I was hoping it would be. Because you can see the forecast for the average close, okay, is about the same as the actual average, as the average close. Interesting. Wasn't quite what I was looking for. Let's just try something over here. Okay. Let's get rid of that one. What we want to do is we're going to forecast it out for 12 weeks, okay? Because that'll give us the forecast for the next quarter, all right? So it's January, February, March. So we're forecasting the low. Alright. Nothing very exciting there, is there? Weekly. So this is close. This is low. We do high. Okay. Alright, let's come down here. Okay. I'll come down here. See if we can get something more exciting this time. So remember, what we're doing is we're forecasting the first quarter. Okay. So let's start with an initial plot. Yeah. You can see the forecast low showed a little bit, but the forecast high. Interesting. So there's our first forecast. So now I'll come down here. We'll just come, I don't know. Let's just do this. Okay. All right. Okay. So this is sort of interesting. Okay, so the blue line is the average closing price. The dark blue line, the light blue line is a low forecast. Interesting. The orange line is the forecasted close. So the forecasted close and the forecasted high are the same. Does that mean there's a possibility of some downward momentum? Interesting. Anyway, there you have it, a very quick look at on some forecasting, and try to add a new wrinkle to our forecast, that is forecasting high, low, and the closing prices. Okay.